Are you thinking we'll sell the news tomorrow when it comes to Nvidia?
Well, look, Caroline, first of all, lovely to be back again. You know, there's 771 companies announcing this week, but there's really only one that matters, isn't that? And that is Nvidia, of course, tomorrow after the close. And there's huge expectations built in. I mean, the stock is up nearly 50%, a little bit of correction today, but the stock is nearly up 50%, you know, nearly 18 times over the last 5 years. So it's been on a roll here, 230% last year. And of course, last week it edged out Amazon and Alphabet in terms of, size at 1.8 trillion. Expectations are high, Caroline. I think probably they'll deliver. Who knows, really? I have no insight into that. But what I can say is the demand for Nvidia GPU chips seems insatiable at the moment. And I think it's going to be more about what Jensen says about the outlook, the growth, and the product lineup, as opposed to what he actually delivers in the earnings.
Are you anticipating that really Nvidia is a winners-takes-all kind of scenario, or do we see catch-up with other chip makers being able to make inroads into GPUs?
Well, look, anytime you have a market that's projected to grow 18 times over the next 10 years, where Nvidia's gross margins are 70%, you're going to have competition. And at the moment, AMD and Intel are producing chips that rival Nvidia. And of course, Jensen calls them the frenemies. Who are those? Microsoft, Meta, Amazon. They're all developing accelerator chips as well. But look, Nvidia does not stand still. They continue actually to bring out a lot of product releases. We've got the H200, we got the so-called Blackwell, codename Blackwell, and of course we have the X100 next year. And in each of these, what we expect is to see greater energy efficiency, more processing capability, and lowering costs as well. And this is going to be all about the volume story heading forward. But, don't write off Nvidia. They have a pretty strong competitive moat. Let's face it, Nvidia is more than a hardware company. It's hardware and software and tools and development and training modules. This is really important for the development community. CUDA, this is a very, very important competitive moat that they have, certainly vis-a-vis AMD and Intel. But also, Nvidia is cloud and platform agnostic. So that's important for enterprises. If you're developing your large language model, you may not want to be just hitched up to one hyperscaler. So there's a lot of competitive stuff that Nvidia still has in their favor.
Talk about the hyperscalers and talk about what we've seen in terms of Alphabet, for example, trying to ultimately provide from the cloud perspective, but also when they have been offering the competitor to Microsoft's OpenAI and Bing Search and the like. Have you been impressed with the way in which big tech has been able to ensure that they're not being innovated out by some of the more nimble startups?
Well, I think it's really interesting, Caroline, is that the foundation level, that layer, the digital infrastructure, this is the home of big tech. These are billions of dollars.
It's just so
small
expensive.
tech, they can't compete, right? But I think what we're seeing is a really interesting trend, which is big tech and small tech working together. The poster child for that, of course, is Microsoft and OpenAI, and then you've got Amazon and Anthropic. But remember, last week we saw Nvidia reveal a whole bunch of investments in small technology. Yes. What's going on there? That's because they need each other. Small tech is not going to have the kind of capital to build the foundation level, but large tech needs the innovation coming from small tech, the training of models in particular complex areas such as pharmaceuticals, drug discovery, autonomous vehicles, ARM, this is AI on the edge. This is AI and everything we carry with us, our phones, our tablets, the meters at home, etc. So I think this trend of big tech and little tech working together goes under a bit of the regulatory scrutiny, but it's also a win-win for both sides.
So Nancy, as CIO, where do you gain that exposure? You're obviously going to be getting into the publicly traded stocks, but where have you found alternatives when you are looking at the private markets?
So 3 ways that we're looking to play this. Number 1, we've got passive S&P 500 exposure. Thank you very much. It's very cheap. So, and it means we don't underperform, which is a good thing. Lots of people did last year. But the second thing is we're adding a global tech manager because we think there's a divergence. Last year was all about about the Magnificent Seven. You had to own all of them. Take a look at this year. Nvidia is up nearly 50%. Tesla's down 25. Yeah. Hello. So divergence in performance. We also think there will be a broadening in the tech space. We see it with ASML, ARM, SAP by way of example. Lots of companies are going to participate as they become part of the Gen AI journey, an opportunity ahead. And we also think, smart technology managers focused on winners and losers can really think about areas that have not been priced in. So those are two things we're doing in the public market. I talked about big tech and little tech. Yeah. We're going to play that through the private markets because we get exposure to leading venture and growth managers that are investing in this space. And we think that's a phenomenal opportunity because if we get that right, those gains aren't like 10% a year. They're absolutely enormous potentially. So we think that's interesting. But the final thing I'll say, Caroline, is infrastructure. Jensen, Satya Nadella, there's $1 trillion of infrastructure spend to happen in the digital space. It's not just going to be data centers, fiber optics, towers, edge computing, power, and we think infrastructure very interesting, uncorrelated to the equity markets, has a bit of an inflation hedge. That's quite nice given the numbers we saw last week, and we're underwriting that to about a 10 to 12% return. So we think that's pretty nice as well.